Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday presented by the Cal State Bakersfield Small Business Development Center. Good afternoon, I'm Kelly Bearden. I'm the director of the center here, located in downtown Bakersfield. And this is Webinar Wednesday, number 322. And we got a great guest today, some exciting capital programs, always more capital to get your business going, expanding, or transitioning. So let's get on. And today is July 10th. And so what is up today, July 10th? Well, if you're in the San Joaquin Valley like we are, then the heat is on. And also Eastern Sierra, pretty hot over in Bishop too, and some of the other areas throughout Central California. So the heat is on. Murphy's got a new movie out. They play The Heat Is On in it. But so are the funding options. That is what is so great, as we've talked about so many unique and special funding options. We're going to continue that trend today. So we're going to take a brief look back at last Friday's, a week ago Friday's, Eastern Sierra Capital Summit. A couple of the highlights from it we'll share with you, along with some of the news, some updates and programs that you need to know about. Our Economic Corner, which is a regular feature on Webinar Wednesday, will return soon with our resident economist, Dr. Mark Evans. Until then, really kind of quiet on the economic front. But what we do see potentially the Federal Reserve is trying to knock those interest rates down. And trust me, I hear from a lot of you out there that have variable rates, be it an SBA loan, an SBA 7A loan, or other type of variable loan product. And I feel your pain with interest rates on many of those up over 11.5%, a steep increase from when most of you took out those particular loans. So hopefully we're going to get some relief and get interest rates going the right direction and trend downward. And that's pretty much our economic update for today. We're also going to jump in and have some tools and resources to help you thrive. Our producer, Maureen Busherdang, will be working the back side of Webinar Wednesday in the chat, and she will put the resources in today's chat. Feel free to go in and grab those particular resources. And your questions. If you have a question, please use your Q&A. Put it in the Q&A box, and we will attend to your questions after the presentation of our special guest today. And as mentioned, all those resources will be in the chat box. And today we do have a very, very simple Webinar Wednesday poll for you today. And it is going to focus on how much money you would like to ideally borrow. How much do you need? Is it less than $25,000 or $25,000 to $50,000? $50,000 to $150,000, or is it over $150,000? So a little question on, how much do you need? And an important question in small business financing, because it oftentimes determines what programs will work and some might not work. But really kind of a great little primer for our special guest today. So if you could just respond, how much do you need? Less than 25, 25 to 50, 50 to $150,000, or over $150,000. Okay, great response so far. 76% of you have participated so far in the poll, so I'll give you one last moment to jump in. So 76%, great response, appreciate it. We are just hit 80%, and you know how I love that 80-20 rule. 80% of you responding, 20% of you did not. And we're going to end the poll, and let's share those results with you. And the number that pops up the most is, 38% of you, $50,000 to $150,000. We actually have 24% of you that are looking for less than $25,000, and a tie for third place. 19% of you, nearly 20% of you each are looking for 25 to 50, or actually over $150,000. So thank you so much for participating. Helpful bit of information there. And let's move along. So our Capital Quarter feature. Capital Quarter is a normal, regular feature of Webinar Wednesday. Today, our TMC Community Capital Specialist, Natalie Del Toro, will be here. And until then, I'm going to give you a quick update on our Capital Summit. So as many of you know, our Eastern Sierra Capital Summit was a week ago Friday. The Capital Summit are designed to work as a reverse Shark Tank, which is to put a lender in front of a bunch of borrowers and let them actually present and pitch to particular borrowers on what their lending programs can do. Now, it isn't only lenders. There are investment and other types of programs. There's crowdfunding programs. There's all kinds of programs between $5,000 and $10 million that were presented here. A lot of great resources. Live festive audience held in Mammoth Lakes, California. An online audience as well. If you attended, thank you for attending. So let's talk about a few of the things and the findings that we came away with. You know, we had a lot of lenders, but really one of the things that is really unique, I think, about the Capital Summit is the vast number of alternative lending sources that become available and are shared with the audience. And so we looked at a lot of different lenders that are out there and a lot of different programs and non-lenders and potential sites to where individuals can find any types of money. Is it either it be debt, whether it be if you're searching for equity or investment capital, if you're searching for unique funding sources and unique ways to fund your particular business. You see this slide is there is money for everyone slide, and this was presented by our one of our special guests that day, Scott Rogowski. Thank you, Scott, for being there. And what money for everyone, and I tell Scott this, I don't think there is money for everybody, for everyone, but there are a lot of different resources that are available if a traditional type lender, a community development financial or CDFI lender aren't able to produce a particular program for you. So here were some of the options that he kicked around. Let's go through them real quickly. There are community revolving loan funds for many cities, counties, and even statewide programs in some areas. So a lot of local governments get involved. And also in relationship to that, there's a program through California where you can actually statewide, if there's funding available, it's called the over-the-counter program. And this is a program where you can actually apply it on a statewide basis. We talked about some transactional lenders and the fact that oftentimes for collateral, there is a uniform commercial code blanket collateral. And some of these you might already have on you from some of the pandemic lending. For example, it could have been placed on from one of the economic injury disaster loans. Oftentimes, there's a blanket collateral, and that could actually impede your ability to borrow future funds. So it's important to know what you have, your assets secured if you have other funding in place, because you really need to know that when you get ready to do funding. So Scott talked about transactional lenders that are more interested, not in your total banking relationship, but in just making a loan and a transaction available to you. Talked a little bit about the state guaranteed lenders programs and a lot of the things that are happening with SSBCI, State Small Business Credit Initiative. Talked a lot about microloans. We're going to get into that today also. We talked about farm loans and some of the unique farm products that are available throughout our vast agricultural region here. And also he talked about some of the on-site lenders, some of the fintech companies, the good, the bad, and the ugly. You know, we'll just focus on, you know, bad and the ugly right now. And that's some of the sites that, you know, don't disclose their APR, their annual percentage rate, and those funds can actually be at a cost of, you know, over 40, 50, 60, and even 80% when calculated out. Really, we heard a great success story at the Capital Summit, and it was an individual who resorted to private money. oftentimes hard money that was real estate secured. And a local project in Mono County there in the June Lake area, where actually used that particular money to buy a particular property and now is in the process of developing the particular parcels, has been able to refinance that at a better interest rate, and is looking to now do many great things in that particular area. Talked a little bit about equipment loans and leases. Leases, another unique way. Crowdfunding, one of our SBDC advisors, the great Jim Thompson, presented on some of the Kickstarter campaigns he has helped initiate and was working on at the time. Great way to do that. You got to bring a crowd. And right now, the interest in the crowd on Kickstarter is email marketing. So if you have an email database list, lost some friends, it's really unlimited, the things that you can do crowdfunding wise. And those that are looking for maybe larger amounts of money, either through angel investors or venture capitalists that have very detailed projects that they're looking for, maybe early stage capital or even mezzanine or mid-stage capital. So there's other forms of capital that are available, but there is money for everyone. And he talked about some of the programs that we see here at the SBDC. We see people that actually use credit card financing, and there's a good way to do that and a bad way. The good way is actually enabling a company to help you arrange that type of funding through several different credit cards. Oftentimes it comes with the first year at 0% interest. Again, these are programs that we see. We don't really advocate or actually go out of our way, because that very last one, that 401k IRA retirement account, we see a lot of people that will turn in their retirement accounts and pay an early withdrawal. They will actually pay a good amount of their capital in order to access their retirement funds to start or expand their business. And there are creative ways of doing that to where the owner can form a corporation and borrow from himself. So very creative ways. Collateral-based lending also on cars and commercial real estate, and then also invoice financing, which is a unique form of where you can actually get financing for your invoice and also potentially some credit memos and sources as well. So a lot of unique ways to do it. And just because I like it so much, is there ways to export your particular service? Yes, your service and your goods. And Andy Cito of the U.S. Commercial Service spent a good deal of time with us explaining a lot of the incentives and financial programs that are available to help you. So really an area to where the SBDC and others can help you. And that's a wrap of this year's Eastern Sierra Capital Summit. If you missed it, we'll be doing one in Bakersfield in late summer, early fall, and then another one in the Eastern Kern County region of our 3 each year. So really a great opportunity if you are looking for capital. But if you've recently started your business and really are looking, and your business is an LLC, and I say recently, I mean as of January 1, 2024, that there is the actual filing that needs to be done for the beneficial ownership information, and that is filed through the FinCEN network, which is a U.S. government database that is wanting contact information and location on LLCs, corporations, and others. Most of these are 20 employees and less, smaller ones, and it is to help weed out bad actors and bad players in the particular area that are hiding behind some of these disclosure rules. Big fines and penalties if you don't do it. If you've started your LLC, your corporation, it needs to be done as soon as possible, and really within a number of days from when you actually file. So look into that. If you are an existing LLC or corporation, you have until the beginning of 2025 in order to do this particular filing. But the penalties can be as much as $500 a day. Last time I calculated, it was like $17,000 a month just in penalties for not doing this. Some of the resources to talk about at your friendly SBDC our CSUB SBDC YouTube page. You can go here and you can find this webinar. It might take a few days, it might take a week, but it will hit the CSUB SBDC YouTube page. We do have over 400 and something subscribers. You can go subscribe and get a notification when today's webinar hits the YouTube page or the YouTube channel. And membership has its privileges. That one is free. You can get to it from anywhere. But for those that are SBDC clients who go through the process of signing up as a SBDC client, it's free. It gives you other resources that are available. And some of these include resources that are in our SBDC toolbox. For example, an SBDC client can access Live Plan, which is a great interactive, intuitive live planning tool that actually helps you work with your advisor on creating a wonderful business plan for your particular business, a business plan for whatever purpose you want. Maybe it's a 10-page business plan that'll help you get a microloan or some of the products that we're going to hear about today. Maybe it's also a more in-depth plan for angel investors. A couple new ones that I want to add to here. You'll see great things on here as well. It's our YouTube channel. We do have a new resource. It's called Vertical IQ. It is a wonderful database, a collection of resources for market intelligence, and also the quality risk management field book, because insurance is such a crucial issue in businesses today. We have people that can help you. They've written the book, or at least the field book, for crying out loud. So real quick, Vertical IQ, we're going to be getting into this in subsequent webinar Wednesdays and talk about some of the great resources. But here's just a quick snapshot of some of the things that can be available. It really shows, again, it shows up in the industry intelligence level and really shows a lot of the things such as industry-wide facts and actually financials and other things that you can find out that's going on in your industry. Compare your business to your industry. It's great to be able to do that and to see how you're doing and how you rank in a particular industry. We use your NAICS code in order to do that. There's a lot of things beyond the basics, and there's a lot of sales tools. Many of those are actionable, they're convenient, and they're focused, and they really kind of help a lot of what you can do when you're accessing customers. Being invested in your success is another thing that Vertical IQ and the SBDC program are, and also your customers, and really kind of working to help you move on from that. We will have much more on this in the next few weeks. We talked about this about 6 weeks ago, I believe, and that was the risk management field book. Thank you, Morgan Clayton, for sharing your experiences with the field book and the great aspects of risk management. Beyond insurance, risk management is managing the risk exposure for your particular business. And it could be, layered responses. It could be increased levels of liability insurance. It can be your actual moving from a sole proprietorship to another entity, such as an LLC or corporation. So really the risk management looks at the assets that you need to protect, and we can help you do that. There is the free human resource hotline. It's available in all of these counties at those phone numbers provided by the California Employers Association. Reach out to them as maybe a first step if you have an HR question or if you have a particular issue that you think they might be able to help you with. If you like today's webinar, let us know. Respond to our surveys that are going to be provided to you today, or go on Google and write us a nice little, if you have success with us, write us a nice little review on our business profile page. If you have other issues, you can always contact us. I want to know. And you can contact us also to sign up for SBDC services. And that brings us, finally, I know, to our special guest. And our special guest today is Natalie Del Toro. She's the SoCal representative at TMC Community Capital. And, since I generally will hack up a good introduction along the way, I didn't know of TMC Community Capital until probably about 3 or 4 months ago when we were meeting statewide with SBDC directors statewide. And I was even on a access to capital panel. And of course, one of the other panelists goes out and says, okay, you guys all know about TMC Capital. I know you're all working with them. And of course, I'm the guy sitting in the room at the front in the panel that isn't working with them. Well, we fixed that today, my friends. And so we're bringing in Natalie Del Toro. She supports and works with their community development financial institution in that particular space, which is an entryway for many minority and immigrant entrepreneurs to grow their business. She is a product of our UC system, our UCLA, previously banking experience. Natalie, it's great to have you here. Thank you for joining us, and please take it away.
Thank you so much, Kelly. I'm super glad to be here and for that introduction. So like you mentioned, I am the Community Development Officer for TMC. Our organization, like you mentioned, is a CDFI, which is a very long acronym, Community Development Financial Institution. But basically the best way to think about this space, or the CDFI space in general, is that these institutions are nonprofit financial institutions that exist to help small businesses grow when they are unable to attain capital in more traditional forms. So it's like alternative lending, but still being responsible. You know, we're trying to stray away small businesses from going to those predatory organizations with higher interest rates. So we exist to kind of be another option when you can't get maybe perhaps an SBA loan or a loan through a bank, providing some flexibility with credit, documents that we ask for. And so I'm going to break down a little bit more on how our organization fits that space, what we represent, who are the small businesses that we work with, as well as kind of break down how you guys as a small business owner can also prepare if you are looking to get capital, either now looking to apply or in the future, something that you can always keep in mind, whether it's to help you or someone that you know. So again, our organization is TMC Community Capital. We are an organization that is dedicated to offering basically access to capital. It's in the name, but we focus on microloans. So we do smaller loans from 5,000 to 50,000. We know that there's a lot of institutions out there that maybe, you know, millions of dollars or thousands, hundreds of thousands of dollars. So we came in to kind of want to fit this space where it's a small business owner who just needs, you know, the smaller dollar amounts to, whether it's to buy an equipment piece, to get an employee, or to get some inventory. You know, there's smaller also businesses who also need this space to, you know, make it quick and easier process. So that's where we kind of want to come in to promote economic development across the entire state, different regions, since we do cover all of California. So our entire target is really to help under-resourced small businesses or women-owned, low income, and that's kind of what we're going to break down here with our impact. So our organization was actually started in 2019. So we got our CDFI certification, something had to do with the government in 2021. So during like the COVID period, but we were able to also kind of help a lot of businesses during that time, and from that moment on we have really grown at it in really heavy pace. So again, we cover all of California. A large percentage of the businesses that we work with are of color, women-owned, also low to moderate income, and we do tend to work a lot more with businesses that maybe are in the kind of like startup stage a little bit, but have been operating for 1 to 5 years, as you'll see here. And we have lent so far since 2023, like our last fiscal year. We have been helped about 200 small business owners now, and trying to kind of extend our range to other counties in California where it's needed. So some information about the products, or before I jump into that, is how can a business owner be eligible with us? So this gives some background into who is it that we can offer our loan products to. Is one, really easily, you just have to be a for-profit business in California. That just means that one, we don't do nonprofits, and two, you just have to be registered in the state of California, and that being with, you know, an SOS filing perhaps with the state, or some types of proof that you can provide, or doing taxes here as well. Second, You do have to be in operation and generating revenue for at least 12 months. So that's one thing that we are very transparent on. We don't do startups, but if the business is maybe already have 1 year in operation, they're generating revenue, they're about to make that 1 year, we can be flexible and help those businesses as well. So as long as you have 1 year or about to make that 1 year mark, you can apply with us, which I'll explain for the amounts. But besides that, the last one is just certain excluded industries that we cannot offer our loan products to. They're excluded, and that is adult entertainment, cannabis, rideshare, like limo service, that sort of business, and as well as real estate or speculative, which is like in crypto or financial. But besides that, those are our 3 eligibility points. We can accept ITIN holders, so citizenship status does not matter. And in terms of credit, which I know is a big question that a lot of small businesses have, we do not require a minimum FICO score. So we do check credit. Our loans are personally guaranteed. I'll kind of break down what we're more looking for exactly, but we don't have a minimum credit that we ask for. We look at the entire report and better trying to understand what we see on there. If there's late payments, we'll ask why. If there's charge-offs, we will also want to get an explanation from the small business owner. And these are our loan programs. So we have, it's very quick and hopefully easily to understand, but it's just 2 programs that we offer. And it's because we only do amounts from 5 to 50. So the first one being the microloan light. This was created to make the process, quick for those small dollar amounts, whether it's, to buy a small inventory piece or equipment that's needed. So this product here is, again, 5 to 15,000. The interest rates, as you'll see here, is 7.5 to 8.5 fixed. We do not, our interest rate is not credit or risk-based. So your credit, if you have a low credit score, you might get a higher interest, but it's actually just based on the term of the loan. So it's just not credit or risk-based. It's just if you have a 1 year to repay it, or 2 years, or 18 months, it will fall at the interest rate of 7.5 versus if it's at 3 years to repay the loan, it will be at 8.5. And the cool part about this product is that we only require 3 months of bank statements. So we're trying, like I mentioned, minimum documentation we're trying to achieve here, make it quicker and easier for the small business owners to understand. So there's not a lot of back and forth. So we're just going to need 3 months of bank statements, whether that's a business account that you have and you're depositing everything, or if you are a sole proprietor and perhaps you don't have a business account and you're depositing everything into a personal, we can also set that as well. But besides that, it's really going to be the formal items, which is proof of business, and then a valid form of ID for the business owner. And then we'll jump into our second product. So the microloan, or regular product here, is any amount higher than 15,000 all the way to the maximum that we offer of 50K. The interest rate, as you'll see here, does increase up to 10.5, and that is because we also offer higher terms for these amounts. So this is where if it's at 4 years, it will be at the 9.5 interest rate, and if it's at 5 years, it will be at 10.5. The difference between this product and the one that I discussed before, so microloan light, is that because it's higher amounts, we're also going to need tax returns here. So besides bank statements, we're also going to need 1 year of tax returns. So at the moment, if a business has not filed, for example, 2023, there are people who are still in extension. We can accept 2022, but we would also need to ask for a profit and loss statement. So profit and loss statement is something that can be, if you are unsure what that is, you can either ask your accountant or also your SBDC consultant to help you create it. Basically, it shows the same information as tax returns, how much money the business is being making versus how much are the expenses and what is left for profit. That's really what we're trying to understand in order to review the business. But this one thing that I also will be transparent about, and we tell all of our clients, is that we do have a 5% processing fee, as you'll see on both of these products. So whatever amount that a client is approved for, that being, 5,000 or 20 or 30,000, 5% is taken out from that amount. It's nothing that you have to pay out of pocket. We do not have an application fee. It's just meaning whatever amount that the client is approved for, 5% is taken from that amount, and the remaining would be wired directly to their account. And so also, as a big part of the presentation, we wanted to talk a little bit about our impact, who are some of the small businesses that we help. And so This is Todo Verde. They are a plant-based Mexican food business that is actually located out here in Los Angeles. But they basically have created this line of products, and they try to, well, they were applying with us to be able to move their products online and onto into local stores like Bristol Farms. So they were able to receive a $50,000 loan with us, providing all the documents, coming to us with what they need the money for, how much exactly, and they were able to get it and moving their products into the store. So this is something that they, now are doing taste testings out there, and we're really integrated into working with them. The second business owner here is Christina. She was actually referred by one of our partners. So we work a lot with community partners out there just because we know there's this trust in being able to know that, someone that you're working with one-on-one can connect you with somebody else that they trust as well. So Small Business Majority is one community organization that we work with, and they referred this business who had a preschool, and she was actually trying to move into her first location. So she was asking for $25,000. And so she was able to move from a home to a commercial location. And this was actually in 2023. And actually, we just actually funded her again, so a second time, because she's opening a second location. So we do kind of extend our partnership or a relation with a small business owner where we want to continue working with them, keeping up with them, and how the first loan helped out if they're looking for more capital, whether it's that they want to get more money with us or we can connect it with another lender that's whatever they may need. But we want to make sure to follow you through the journey, really help your business grow. And I hope that this kind of showcases a little portion of some of the small business clients that we help, but really it's really open-ended, and we're not focused on one specific industry. We're pretty open-ended. And so that's a little bit about our programs, who we kind of help in. I'm going to jump into the next portion here to talk about the 5 C's of credit, which if you are not familiar with, this is often what lenders or a financial institution, be it your bank, your CDFI with us, is going to use to be able to analyze whether a small business owner can get approved or denied for a microloan that they are seeking. So we are going to be looking at each of these C's as a lender. I'm going to be breaking down what exactly these are and how you can prepare to when you are looking to apply. So the first one is character. Character is really important because I'm sure it's one that you guys are most familiar with. But character is, as a lender, what we're trying to understand with character is the owner's willingness to repay the debt. So we're trying to know, who are you? How much information do you have about the business? How much of an expert do you have on your own business? We're trying to understand who you are, how responsible you are. Are you going to be able to repay back this money that you are seeking? And how a lot of institutions tend to do this is with 2 factors that I'm sure you guys are familiar, is with your credit score, so the FICO, the history in itself, and then tax history. Tax history here refers to, are you doing your taxes on time every year? Do you have those on file? Do you have a bank account where you're depositing everything? So like, how prepared or formalized is your business, and having all those documents ready to present to a lender. So I'm first going to discuss credit score. I know many of you guys are probably familiar with perhaps over what your credit score is, but if you are unsure of what your report is, or maybe what you have on there, you know what your credit score is, but you don't know what it's on your report, please be aware that you can attain a free copy of your entire report on this website here. You can do it once annually. So that's one resource that I can share out here if you're unsure of what your credit score is. But there's 3 agencies that exist that we can report this credit score to. There's Equifax, TransUnion, and Experian. At TMC Community Capital, we use Experian. I can be transparent about that. And typically credit scores range from 300 to 850. But a lot of people know we have the credit score, but what is it composed of really? So what affects it, whether it's negatively or positively? How can you better your score if it's needed as well? So a large percentage of this circle here kind of composes into what makes your credit score. The largest portion here being 35%, which is payment history. So basically, as you know, if you have a credit card or an auto loan and you miss a payment, this is going to negatively impact your credit score, versus if you are on time on every account on your credit, this will positively impact you to grow your credit score in the long run. The second biggest portion here is 30%. This is debt to credit utilization. On your report, we do have a percentage that a lender will see that indicates to us how much credit are you using. What that means is if you have multiple credit card accounts and perhaps combined your limit on those accounts are about $30,000. If at the time that we pull your credit report, it indicates that you are using about 90% of those credit cards, that's going to indicate to us that you're depending a lot more on credit, which is often not the best what a lender wants to see. So typically, as kind of thumb rule, we tend to say that it's to fall anywhere from 50 to 30%, so not be using all of your credit. So being able to manage that and not depend too much on your credit cards. So keeping that debt to creditization low is what I would say. And then 15% here refers to credit history. So what this indicates here is pretty straightforward. How long do you have building your credit? So if somebody who opened their first account, obviously it's going to take them longer to be able to grow their score versus someone who maybe has already years building their credit, 20 years, they have multiple accounts on there. They have a, easier for them to get impacted. And the last two sections here are credit mixture, which is 10%, which falls into like how many different accounts do you have? Do you have credit card? Do you have a mortgage account? Do you have an installment, which is like an auto loan or a business loan as an example? And the last thing that can impact you for your credit score is new credit. So anytime that you do apply for credit, whether it's a credit card or even a business loan with a financial institution, do be aware that when a organization or institution runs your credit, what that means is an inquiry, that will also make your credit score fall of like a few points down. So whenever you are applying for new credit, that's something to take into mind. And that is referred to a hard pull. So if an organization makes a hard pull, that means that they're running your credit, they're getting an inquiry, versus if an organization is doing a soft pull, that means that they're just getting a stake, not pulling your entire credit, so that would not affect it. We do a hard pull, but that's once after we have all the documents collected. And to better understand character here, we also will kind of indicate trying to understand more about you is how much experience do you have in the industry? How long have you been in business? So wanting to know more about your business, the business owner as well, but how much they know about the business that they're running. And as well, one thing that I will be very transparent about is please always be honest with the lender that you are working with. If you know perhaps that you don't have the best credit, or maybe there was just one incident where you were able late on time, just speak with the lender. It's always better to be honest so that I can have that conversation with you. Perhaps it's like, oh, it is something that we can work with. We'll just need to get explanations. Or if it's something that's too difficult to bypass, then I can connect you with a better resource where you can first start with them. And once you're ready, come back to apply. Our organization is pretty flexible with credit because we don't have that minimum FICO score, and we are a nonprofit who kind of is trying to target. We can ignore collections that have to do with medical, cable, utility companies, student loans, and then if there's late payments, we tend to focus mostly on the most recent 2 years. That is where we're going to be looking at. So anytime if there was a lot of businesses that were affected during COVID, which we still tend to see today if we look at reports. So we can just basically accept COVID as an explanation. If there's a time period where, there was a lot of late payments or charge-offs, but we want to focus more as most recent time. So that being, most recent 2 years, indicating on there what, if you're not now caught up with all your payments. But always be addressing the issues that have with your credit and your financials with the lender. It's better to be honest versus, say you have a good credit score, and then once they run it, they see something else and it's difficult for them to be able to work, and then you're also affected by that credit pull. And the second thing that is really, really important, as I mentioned with those two impact stories that I shared, success stories, is that we want to make sure that every small business clients come to us with two things in mind. One, how much exactly they are looking for, and two, what they're trying to use the funds for. I speak with small business clients every day, and anytime I will always ask these two questions. And there's often times where people will tell me as much as I can get, or what am I eligible? That is kind of more on like that they're unsure of what they're trying to use the money for. So it's better presented if you come to us with already a plan set in mind of what you're trying to get the money for and how it's going to benefit your business. So the use of funds with us is pretty open-ended as well, whether it's someone who wants to buy inventory, payroll, equipment. We also refinance debt. So if there's something that, if you got perhaps an MCA or another loan that's really high interest and it's affecting your business, we can consolidate that loan in order to lower the interest, as well as credit cards. So we can consolidate credit cards up to $15,000, even if they're also personal, especially if as a sole proprietor, you used it to start the business, which is something that we often see. So that's character, the biggest. I know that was a really big concept, but not all of them are as too in-depth. But the second one here is capacity. I would probably say that this is the most common reason that a lot of businesses don't get approved. And this is where the financial documents come into play. So everything that institution asks you for, the bank statements, the tax returns, the profit and loss, the projections, if you are a startup and don't have those documents yet. So really what a lender is trying to assess here is the ability for the business to be able to repay back the debt. So how much money are they making? How much are they having expenses? What we kind of the big concept idea here is cash flow. What it's often referred to debt to service coverage ratio. What a lender is trying to indicate or see here is how much money the business is making versus how much is being withdrawn every month or on an annual basis, so that it can indicate to us whether they have the ability to repay back this loan monthly. So can they afford to take on this monthly payment with this loan? That is what we're trying to assess with both the bank statements and the tax returns. Versus if you are a startup business, we know that a lot of business owners do not have these documents yet because they haven't started making revenue. So on the other side, if you are a startup, you would be providing projections. Again, we do not do startups, so we don't take projections, but we do work with other partner lenders who do have projection-based loans. So this is where they would be depending on. And it basically is a document that shows the lender, I am looking to get $50,000, and this is how I believe it's going to benefit my business month to month, whether it's on a 1-year basis or 2-year basis. It's going to depend on every institution, how long they want the projections to be. But it basically shows how you prepared and you have a plan set in mind for the money that you're securing. And this is really kind of a roundabout. I won't go too in-depth into this one, but basically what a lender is going to be looking at is in tax returns, if there's a net loss, if there's any one-time expenses that we can break down. I will also kind of indicate here, please keep in mind that if you have multiple owners in the business, anybody that has more than 20% will have to be included in the application when you're applying for capital. What that means is that we're going to also need their financial documents and have their credit ran as well. So that's why it's really important to know who you are doing business with, because often they're going to have to follow you on that road to be able to access capital. And bank statements is often really kind of important for us, I would say, here, because it's like where we are assessing cash flow. So how much is being deposited every month, how much is being withdrawn. If there's any negative ending balances, any not sufficient funds, we're going to want to know why. Perhaps if there's multiple overdrafts. So ask the business owner, it's basically going to be indicating if the business is managing their cash flow well. And one thing that I will indicate for us is that we also can be flexible in regards to accepting non-bank statements. So perhaps we know there's a lot of businesses who are using Square, PayPal, Shopify. We can also accept those monthly statements in the review analysis. As well as one issue that we see often is a lot of businesses who are more heavy cash based. So business who makes more of the revenue in cash, and maybe they don't deposit everything into a bank account because they use it to, pay their workers or to buy inventory. We can include it into the application as monthly stated cash that never makes it into account to help with the CANAP review process. But in the long run, we want to make sure to share to small business owners that it's really important for them to be depositing everything into a bank account, because that is where the lender can see the paper trail. It's hard for us to be able to, say when a business owner says, I do make more money, I make $20,000, but it's because I only deposit half of it into a bank account. I just keep the rest, at home, under my bed, perhaps. And it's much easier for a lender to be able to keep that all on trail and be able to actually see that money versus, taking the word from it. So while we can be flexible, we do want to make sure that if you do want your business to grow in the long run, please deposit everything into your account, because that's how you will benefited, and it will be easier for you to move in with the process of a lender. So that's capacity. These last three C's are pretty transparent and easy to understand. Collateral is just if some lenders will ask for a guarantee or extra security in the loan, especially if it is a higher amount. This can be seen in different forms, whether it's an automobile that you own, a house perhaps, or certain equipment. It can be also merchandise and invoice perhaps. So this differs for every institution. Some will require because it's larger amounts, others won't. For example, with TMC, we do not require collateral just because we do smaller loans from $5,000 to $50,000. Really, it's the only case where we do require it is if the business owner is trying to get a vehicle or a food truck. That is, we would take that business vehicle as collateral until the loan is paid off. Everything else, it's on a case-by-case basis. We will not ask for it, but if you perhaps know you don't have the best credit, or maybe your financials were affected in the past, like early year, you can present it to a lender to indicate that you know your business will benefit from the loan and you can repay it, and you're even willing to kind of add this extra security because you know you're going to repay the loan. So that's collateral. The fourth one here is capital. Capital is really capital injection here is really important for startup organizations, startup businesses, sorry. And so what the fourth C here means is that a lender's going to want to see that you have made sufficient investment into the loan and your own business. Because you still have not started making revenue, we're going to want to see, or I will say other startup lenders are going to want to see that you have already put your own personal funds into this business. You believe in your business, so you are providing your own funding for it, whether it's them asking for you to put down 20% of the loan that you are seeking, or being able to provide receipts from what you have already put into. So as an example, if for a startup lender, if you are asking for $100,000 with them, they might ask that you provide from your own funds 20% of that loan. So they're going to ask you to put 20,000, and they would be funding the remaining in order to secure the entire loan. This is what we often refer to capital injection, kind of like a down payment for your own business to secure the entire loan. And then lastly here is conditions. Conditions is more so something that you can't really affect too much, but it's something that you should be aware of. So this refers to the general economic conditions related to your business, and this can often fall whether it's the industry that you work with, how the economy is doing, the experience. As an example, one thing that I always kind of share to better understand what we mean by this, like how are lenders looking at the conditions. During COVID, if a restaurant came to us looking for capital, looking for a loan, it would have been very difficult for us to approve their request just because all restaurants during that time were closed. Nobody was going out of their house. It would be difficult for us to be able to see that they were going to benefit from getting this loan rather than being able to grow from it because everything was closed. One thing as well right now, there's certain, as we know, because of the inflation that the economy is doing, there's certain industries are being more affected than others. So the way that our organization has to look at this is that we can have to be stricter and regulate those industries. So as an example, for construction right now, we can only do up to 25,000 for those businesses versus other industry, they can do up to 50. But for construction, because they are being affected by the economy, we do have to restrict up to only $25,000. That's one example. Being aware of how your industry is being affected by maybe not just our institution, but other institutions, other economy, is something you can kind of research or also maybe learn from other small business owners. Yeah, some recommendations that you can hopefully take from this presentation, whether it's you're looking to apply now or in the future, is one, obtain all the financial documents that you're going to be needed to apply. So first start off with a conversation with that organization. Tell them about your business, how much you're looking for, and they can tell you how you can prepare what documents you're going to need to get in order. Second, like I mentioned, learn what your credit score is. If you know you have any issues on there, resolve them or get the explanations or just research into what organization can help you. And if you are unsure of, please know that you can use a lot of these organizations or even me as a resource, whether maybe it's our organization cannot help you, we can always connect you to someone that is the right fit. And third, deposit everything, like I mentioned, into your bank account. It's easier if you have a paper trail of how much your business is actually making. And last, always ask a lender what the interest rate is before accepting any loan. Sometimes, you know, a lot of a business owner needs the money and they're doing their, you know, looking into different options. They find one that's kind of marketed as, oh, fast, a quick, easy process, really minimal documentation. But then they sign, they get the money, and it turns out to be interest rates between $35,000, which really affects their business in the long run. So just make sure to know what you are signing, what the interest rate is. A best way to kind of go about this is compare loans with APR. APR is basically the interest rate overall, including all other fees that an organization may have. So if you are looking at different options, comparing it with the APR will be the best beneficial. So whoever has the lowest APR is how much you would be paying less for. But yeah, if you wish to apply with us, our application is really simple. That's something that we wanted to achieve. You know, don't make it too many questions out to fill out that it gets kind of overwhelming. So just personal information, business information, application. It was where we ask for how you're trying to use the funds, how much credit updates to allow us to approve credit, and then finally upload all the documents that's needed. So everything can be done online with our organization. If you do need help filling it, I can do it over the phone as well for you. And our turnaround time, what that means is when we can give you a final decision to get approved is about 5 to 10 business days. It can differ, it's 4 to 6, but it also depends how many small business owners we have, but it's typically a really quick process that we have. If you are approved, from there, it takes about 1 to 2 days for funding. And yeah, that is a little bit about what we do, how you can prepare. If you do have any questions in general, want to apply with us as well, you can reach me here. My direct line is here. Send me a message. I can also accept text or an email at natalie@tmccommunitycapital.org. I'll leave that up a little bit. And if anybody has any questions as well, could you let me know?
Natalie, fantastic stuff. Great job.
Yeah, I know a lot of information. So.
And we are taking questions, so put your questions in the Q&A and we'll get to those in just a second. I really like the fact that you mentioned how important it is to be prepared when you're contacting a lender, because I think a lot of people are not, and they arrive basically dead on arrival to a lender because they aren't ready and they don't have the right financial information, or their financial ratios are out of whack, or they don't even know that they need financial ratios to qualify for a loan. So let me ask the first question. One of those financial ratios, one of our least favorites, of course, would be the cash flow coverage. Do you guys get into cash flow coverage as far as a ratio, the free or global cash flow to cover the amount of the loan?
We look at global cash flow. So if the business owner has outside income, personal W-2 job, or benefits, we can also include that to help their cash flow for the ratio.
You like how I get the tough question out of the way?
Yes.
So we do have some other questions. Bring them now. One of them is, do your loans have prepayment penalties?
No prepayment penalty fee.
Oh, that's great.
Yeah, if you would like. How our payment process works is it is taken automatically from the bank account that the money is wired to, but you do have the ability to also create a portal from our servicing system. If you want to do extra payments, if you want to pay it off quicker, you can do that with no extra fees.
Great. Wonderful. Okay, so waiting for another question. Let's jump into the chat. Maybe we have some there. There's some nice greetings in the chat, and no, from San Jose. That's great. I'm a San Jose Sharks hockey fan, so we have something in common. Going through, Maureen has listed a lot of the resources that we talked about today and where you can find them, including the Corporate Transparency Act, YouTube channel, etc. Some wonderful, oh, thank you people for the nice kind words. Looked also at ways you can get a copy of your credit report. One of those sources is annualcreditreport.com. Here's a question. Do you offer any grants or is it just strictly loans?
We only do loans at the moment. We did do grants during COVID, but it's kind of on a case by case basis when they pop out. Right now, we're only doing loans.
Yeah, the grant scene is kind of going away, people. It's going away. Still a few of them hanging out there, but not much.
I just see a question, how many success stories do you have? We have a lot of, I would say a lot of success stories. It's just kind of, we highlight certain small business owners when, you know, we work with them or we hear back from them, or we keep in touch. But we have over 200 clients so far in our portfolio, different industries. Like I mentioned, we do trucking, we do restaurants, we also do kind of like street vendors is one of our focus too. So we really hope it's like kind of keeping track onto them. So the exact number I am not too sure of, but it's definitely more than the ones I presented today.
Great. Okay. I don't see any more questions. Last chance to get a hold of Natalie for a question.
We can fund consulting businesses. We have in the past, yes.
And the question was, have you funded a management consulting entity? And your answer?
We have funded consulting, yes.
Great. Okay. Well, I guess that's going to wrap us up today. Natalie, fantastic. It's great learning about TMC and knowing more about it. So thank you so much for joining us. Get some deals out of this thing rolling for Kern County.
Yeah, perfect. Thank you so much for having me.
Okay, so that wraps us up for webinar number 322. I'd like to thank Natalie Del Toro for joining us. We'll be back in 2 weeks from the 2 week scene. You know, it's summer, I'm slacking off. What can I say? But we'll be back in 2 weeks for webinar number 323. Thank you for joining us. Everybody have a great week, and we'll see you in a couple weeks. Bye-bye.